The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Alex in Newton. Hey, Alex, what's going on, brother?
Hi, Tom. How are you doing?
I'm doing great, man. Yourself?
I'm doing pretty good.
Good, man.
Subscribe for your gold report. I've been following you for a while. The first time I subscribed for it. And what I love about your gold report is that you give us a direction. You give us an overview of the whole market, and you leave final decision to us because you give a lot of ideas. After that, you can choose whatever you want to follow, whatever you don't.
Yeah.
That is great.
Okay, brother.
Thank you.
Have a great one, man. Have a safe one.
Thanks.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Follow what you love, and it'll take you where you want to go. Natalie Goldberg. Market-wise, let's take a look at it out here. We have the Dow Industrials down 100, NASDAQ off 1, S&P's off 11, gold contract down $4.20, trading at $1,250 an ounce. Silver down 10 cents at $17.03 an ounce. Platinum up $8 at $1,025 an ounce. Copper up a penny at $2.24 a pound. Light sweet crude off 82 cents, trading at $43.36 a barrel. Bonds, the 10-year note down 5 ticks, 129.19. 30-year bond off 24 ticks, 162.21. King dollar up 94 ticks, trading at 94.56. The euro is flat at 112, and the yen is trading down 32 at 109.52. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? The world of the S&Ps. Let's take a look at them. What do you have? Okay. So you get the cash S&P. We're down $11. Volume out here is short volume, meaning light volume, folks. The volume would have to pick up. Well, it's not bad, actually. It's just picked up in the last half hour. Okay, so we're at 679 million. That says that we will do a good 900. We might do 1 billion shares. That's on the NYSE. On the NASDAQ Composite, we're running at 1.3. That's saying we're about 1.8. So the volume's picked up a bit. We'll check it again in another 20, 30 minutes. So what you have, okay, so S&P's giving it up. After what we had the past 2 days is this. It was testing the December 2nd swing high. That's December 2nd swing high on the cash S&P is 2104.27. Now, it failed on Monday on price and volume. Yesterday, however, it got over that and it had volume. We're underneath it right now. If you get an expansion of volume, that brings the probability higher that the S&P also topped out. The composite, the NASDAQ composite. We take a look at the, actually, let's go to the NDX 100. We'll use the QQQ. We take a look at the Qs, and what you have with the Qs is this. We're trading at $110.56. Now, this is, you know, you can make the case that, hey, this has been a sideways move going all the way back till March 30th, because March 30th, you're at $110. Bottom line, you came off the lows here in February. You get up into the gap. It almost closed the gap. The gap is $111.84. We hit $111.44. That being said, it's very subtle, and the subtle part of it goes like this. On the 19th, Monday, we came down, and you had a huge expansion of volume, 42 million. We go up yesterday, and we go up with 18 million. Well, guess what? We're going sideways with 14 million today. So that's saying absolutely zero. That's saying nothing. That's saying there's not enough sellers to sell this baby down. Now, let's check this out. Because after the close out here, folks, there's going to be action. And Google is coming out with numbers. Google's trading up $3.67 right now, trading at $7.56. Now, Google is 4.3% of the NDX 100. And when I look at Google, it's like, okay, man, you know, Google had an amazing quarter, the second quarter of 2015. And then when they come out with their numbers, bottom line, Google goes from $532 to $674. Just boom, goes topside, right? That's in July. Well, last time in February, just the opposite was happening. We went from $789 to $680. Now, what have we done thus far? So thus far, what you have is this. We've come back into this high volume downdraft. The high volume downdraft being from February with dramatically lighter volume. But what that sets up, it doesn't have to be a disaster, but when I'm looking at Google, we're at 756, Google can go to 726. So you get $30 on the way down. And when Google comes out with numbers, you got to remember, Google comes out with numbers a split second after 4 o'clock. So that there is saying inside the NDX 100, that's going to put pressure, selling pressure on the NDX 100. Let's go to Microsoft. Microsoft's a little different animal. Microsoft has been in consolidation for a long period of time. We bring this back. You're going to see that it had broken topside, had the price spread, had everything in October. What it also had now is an ABC up. So the A point on this was 30, your B was 50, your C was 40, so you get $60. Now this is what's pretty cool. We've hit $56, and you hit $56 has been a high thus far. So the real question here with Microsoft is that, okay, you finish an ABC up, you're 4 points away from it. Will it actually hit it, or is that it? Is that the extension? We'll see. Microsoft is a much harder one to basically lay out right now. I don't think Microsoft's going to get hurt that bad. I don't even see it going up to 60 either. But my point is that I do expect that after the close, Google, okay, is the one that'll drive the NDX 100 lower. If we take a look at how the NQs are trading out here today, you're going to see that they've had a decent price spread out here. They've been trading from 45.14 to 45.51. Most of that right there is all about just how Google has been going up and down between the 6 and 7 points. The correlation is pretty solid because a couple of the other equities that are up, they've stayed up. But every time Google starts moving around, that NDX 100 can move. So I'm expecting 4 o'clock, big action out here. Gold contract. What do we have with gold? Gold contract out here today traded from a price point of $12.44 to $12.72. You're at $12.50 right now. Big volume. Gold wants higher price, folks. We've done 265,000 contracts today as it pushed into high. Bottom line, when you push into a high, swing high, have expansion of volume, give it up in price, you get right back up there, at least test it again. So it's pushing into that level, and yes, was there sellers? Well, guess what? There had to be sellers because we went from $12.72 right back down to $12.44, and it's crawling its way back up to the $12.50 mark. Silver, same setup in silver. Silver was actually vicious. Silver had a price spread of $1, folks. That's about it. That is amazing, not about amazing. Silver, also monster volume though. You get monster volume, bottom line, you're going to be up at those higher highs once again. You stay right there, folks. We're coming right back. Dow Industrials are down 107, Nasdaq's off 3, S&Ps are down 12. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow off 107, Nasdaq's off 3, S&Ps are off 12. And as we do each and every Thursday at 20 past the first hour, we have our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, Andy's got an outstanding show, 5 to 6 Eastern Standard Time, right after my show. And no matter where you are in this great country of ours right now, listening in your car radio, remember that you can get us right on your cell phone. You go to TFNN.com. Hit Tiger TV. You're going to get HD video quality, audio, whole ball of wax. Now, Andy also has a great newsletter, the Technomento Commodity Report. You can come over to our website and test drive it. Now, as you're over there, what you're going to see right in the top of the carousel is the 12 essential lessons for trading commodities. Andy has just come back. He made it. It's a beautiful thing. I heard lots of snow out in Colorado, but guess what? He made it out to Colorado, was teaching at the University of Denver, and he's going to be teaching right here at TFNN. As you check this out on the front page, what you're going to see is that the first class is May 4th, 5:30 to 7:30. There's going to be 3 lessons that night. Second class is on May 18th, 5:30 to 7:30. 3 classes that night. June 1st, 5:30 to 7:30, 3 classes, and June 15th, 5:30 to 7:30. You can check it out right in the front page of TFNN. We're going to talk with Andy right now about what's happening in the good old commodity market. Andy Heck, what's going on?
Hey, it's good to be home.
I'm glad you made it,
in the warm weather. I have to tell you, I flew out there on Sunday morning.
Okay.
And I was greeted by 2 feet of snow.
Yeah.
Not in Denver. I mean, it was still snowing when I got there. Luckily, they canceled all the flights out on Saturday, but my flight went Sunday.
That's awesome.
And of course, as in Colorado, the snow was gone, and it was, when I left, it was about 60.
How cool is that? Wow.
And I got home here, and it was 90, which was very nice.
That's right. You're in Vegas. I was thinking go back to New York. You're in Vegas. That's right.
But very interesting, very interesting. You know, in the past, I do this every year. I've done it for about 4 years now.
Yeah.
And every year, we have primarily oil and gas people. You know, from industry, most of the, and we have students also, postmaster students and graduate students. But this year, there was not anyone, not one person from the oil and gas industry.
Yeah,
which tells you something very interesting about the budgets being cut.
Yeah.
Because it's not a cheap course.
Right.
You know, that the university offers.
Yeah.
We had a lot of people from the agricultural markets, a lot of people from the coffee. We had coffee, we had sugar people,
Isn't
we
that
had cocoa
wild?
people.
That's
it was
awesome.
very interesting to see.
That's cool, man. Yep.
It was. It absolutely was. Fantastic course. I really enjoyed it. My voice finally came back today because I talked for 2 days straight.
Yeah.
But it's always a great experience, and I really enjoy going and teaching in Denver. So, at the course, I gave about 4 to 5 hours of lectures.
Okay.
There were other lecturers there as well,
Sure.
mostly on the academic side. And, the course that I'm going to offer here to our listeners is 8 hours. And it encompasses actually much more than I taught these graduate students about commodity markets. So I look forward to starting that. It's only a couple of weeks away.
I know.
And starts on May 4th, I believe. And, 2 hours a night. 3 topics each session, and it should be interesting. And you know what, Tom? It's the perfect time because
It is.
commodities are coming back.
They're on fire,
So-
man. They're on fire.
So I want to start with silver, which
Okay.
had a very interesting day today.
Interesting.
All
Wow. That's yeah.
Dollar range. Listen, we talked about this last
I
week. when
know.
it was, that hey, it was on the verge. It was looking like it was going to
Yeah.
go, and hey, it certainly went. And what I have up here for you to look at in the den, and if you're watching on Tiger TV,
Yeah.
is a monthly silver chart. Now, silver, it can go back down to 1637. There's no question about it. It's right now. What is it, about 1704?
Yeah.
roughly around there.
$17, yeah.
Right. But the work done technically on the long-term chart is important to see. First
is.
of all, momentum has switched to the upside.
Yeah.
Open interest has gone higher with price. I mean, a lot of people are going to be discouraged by the move today. I'm totally encouraged by the price today. We actually went higher than the the May 2015 highs at 1771, and then profit taking came in, which makes sense. All I can say is silver is very exemplary of the other commodities out there.
Yeah.
Put on your seatbelts because it's going to be a wild ride.
Yeah, no doubt, man.
Wild ride. Gold, I think gold is doing some nice consolidating action here.
Yep.
I expect gold to the next level for gold to try is around 1308.
Yeah, listen, man, it pushed with volume. Listen, between the gold and the equities, folks, the gold and silver equities, forget it. They're at 200%, man. So it's,
Right.
there's
Now the thing that really makes me very positive about the sector is the action in platinum. Finally, platinum has come back. It's above 10 and a quarter, which is a key level, and this thing has a potential to make today's silver volatility look like kid stuff. This thing can go to 1288 very quickly. It could go to 1500 if it wants to now on a technical basis. So platinum is looking very good. And I love to look at these intercommodity spreads. The silver gold ratio, which was at 83 to 1 in the beginning of March, is now at 73 to 1.
Okay.
This is a massive mean reversion. The the platinum gold spread, which was at a $320 discount. I mean, you and I beat that to death.
Yep.
Back in March and in February.
Right.
It's now at $220 discount. These are important mean reversion moves, but more importantly, the moves in the precious cousins are very supportive for the sector.
Yeah, there's no doubt. Hey, and the dollar can't go anywhere. The dollar just wants lower price, man.
Absolutely. Listen, I had been a dollar bull for quite some time. I changed my view back when, the central banks basically told
Sure.
us, hey, they want a lower dollar.
Right.
But the lower dollar is very supportive for all commodities. Now, we're coming out of a long-term bear market from 2011. So this thing is not going to just turn around and explode higher. This is going to be a very bumpy ride, and it's going to be tough. So the way I look at it, to kind of put it simply, we went from a period from 2011 till early 2016 where it was always appropriate to sell rallies and buy dips, sell rallies to initiate trades. I think now what we're in is a period where you buy dips and you take profits on rallies. And that's a big change in commodities.
Oh, no doubt, man. Listen, isn't it the reality that commodities are always vicious, though? I mean,
Yeah, they're always vicious, but they've been they kind of just fell and fell and fell. And,
oh, no, I know, I
for
understand
years.
that. I'm just saying that even when they were bull markets, I mean, 2002 to 2006
Oh my God.
and 2011, that was vicious too. I mean,
remember 2008 after the global financial crisis?
Right.
Oil 147, 6 months later 35.
Yeah, it's intense. Man.
Gold was what, 1100, 1200. Then it was under 700.
Yeah, what's 666?
Right,
like
right. So crazy. Platinum over 2,000.
I know.
Right.
I know.
So listen, it's always this way. You got to strap on your seatbelts now. But we're seeing signs across the board. Look at the grains. We're seeing some incredible moves in soybeans. I mean, the thing roofed. And we could keep going.
What was that word you do? Roofed?
Roofed.
Roofed. You're going to hear that a lot, folks. It roofed, baby. You stay right there. Andy and I come right back. Dow's down 117. Nasdaq's off 6.5. S&Ps are down 13.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 128. You get the Nasdaq off 9. S&Ps are down 14.5. We're talking with our man, Mr. Andy Heck, and we are talking commodities. And don't forget, folks, Andy's going to be doing an outstanding webinar. This webinar is 12 essential lessons for understanding trading commodities. And as we go over these, we're going over, the lesson content, like the first night. Commodity markets and demographics, market breakdown, physical versus derivatives, overview of the market structure, On the second night, which is the 18th of May, you're going to have backwardation and contango, term structure, processing spreads. Really cool stuff, folks, to understand how the foundation of commodities, what the foundation is, number one, and how they're traded. So, the last couple of days, Andy, well, let's see, it was the day before yesterday, Monday, when I brought up this Bloomberg screen with every commodity. It was so green, it was amazing, and the grain.
Amazing!
I mean,
so let's talk a little bit about oil, because we didn't get the chance to talk about Doha on Tuesday because I was out of town, and I some interesting things, particularly technical here. So U.S. production dropped below 9 million barrels.
Yeah.
And there was a strike in Kuwait, which appears to be settled now, but I was surprised by the outcome in Doha. I thought it was kind of going to be a blessing session for a deal that was agreed already, but I was wrong. But the price really has done very well. And if you look on the weekly chart, Tom, which I have up here, you actually, the knee-jerk reaction was selling. I mean, Sunday night, oil was down $2.50 right after the Doha announcement, and we exploded higher out of there on the Kuwaiti strike, on U.S. production falling. So we're in a situation now where tomorrow's close becomes very important. If oil, the active month, June crude, NYMEX, closes above $42.42 a barrel, and we're above there now. If it closes above there tomorrow, you have a bullish key reversal on the daily chart. This will mark the first time that OPEC has disappointed the market, that the market hasn't absolutely trashed in the face.
Yeah, and this could be a small ABC up to $49, man.
Right.
On the weekly, which is pretty powerful.
50 is kind of right. Absolutely, it's pretty powerful. It's interesting. Keep your eyes on it. Like I said, volatility, man. Oil can, oil. I'm flat oil here. To me, it's a coin toss. Very, very difficult market to read. I'm looking at the fundamentals. The technicals look good, but I'm looking at the fundamentals. Heating oil crack spreads are still very, very low. Heating oil is a proxy for diesel fuel.
Sure.
That tells us that demand is not that great for the products, or inventories are very high. Well, we know inventories are high, but listen, overall commodities, overall commodity strength, a lower dollar, very interesting. I wanted to also talk about, I want to talk about natural gas, but there's been some talk in the den today about a meeting that happened. I think John from Philly's been writing a lot about it. In the den today, about a meeting. The Chinese actually came, I think, to the U.S. for trade talks back in October 2015. And he seems to be surmising that there's a lot of Chinese buying in the commodities that's filtering through. And the action in the Aussie dollar particularly is kind of a validation of that. And I think that what we're seeing in a lot of commodities is very interesting. And if we go to the true proxy for China, copper. Copper has acted very well, Tom, and I think that on this move, we could see copper get up to $240, $250 a pound, because copper, it broke through resistance at 214. It went up to 232. It came all the way back to about 207. Now we're back up at 2.25, and the LME is getting tight. So there's a small premium for nearby copper as opposed to 3-month copper. So I think that means that there's some really good demand filtering through in the copper market. And all base metals are up since March 31st. That's aluminum, nickel, lead, zinc, tin. And these are all very good proxies to watch for China. So that might be telling us that the great demand side of the commodities equation is buying here. We know they were buying things like soybean oil, but it's very possible that they're buying other things, even gold.
Oh yeah, I mean, listen. I think the commodities in a bull market, man, and it has been. We'll find out pretty soon. But they're moving. The equities are moving like the equities moved first. Even some of the agricultural equities. I mean, if you look out here today. So check this out. Inside the NDX 100, tractor supply. One of the leaders out here, man. This thing's a monster, man. And gapped up $4 out here today, and they're just, and this has been moving. Well, actually, this is going to be pretty cool, Andy, because this was in a consolidation at highs since February of 2015, and now you broke topside with huge juice, man. So.
So let's take a look at natural gas, because I know everyone loves that trading sardine, right? Now, natural gas, it keeps trying. It keeps trying to run those shorts in. But, the fundamentals weigh heavily on that market.
Yeah.
We're up at around 206. We got up to around 213 earlier in the week. This is a classic battle. I wrote an article.
It is, man. It really
that
is.
came out. I called it the Caligula of commodities, that it loves to it's a sadist. It wants to hand out as much pain as possible. And it has its eye on those shorts. Now, the short interest is coming down a little bit.
Okay.
But it's still... open interest is still at the highest level since 2014, when, if you remember back, natural gas exploded, went to $6.50.
I like how this is set up, man. I mean, natural gas looks like it's going to make that run to 230. We'll see.
I'll tell you, 230 is definitely possible to barbecue some shorts, but fundamentals still weigh heavily on this market. But longer term, Tom, $2 is not an economic price for producers. If you look at classic economics, prices fall to levels where inventories come down and production becomes uneconomic. Producers cut back, and then prices can gradually go higher when inventories are worked off. That's what we need to see in natural gas. But that's not the kind of thing you're going to see in a futures market on a day-to-day or week-to-week basis. This is a longer-term phenomenon. But certainly, when a lot of shorts get very emboldened in a wild market like natural gas, watch out. Watch out. And also, everyone should keep their eyes on natural gas margins on the New York Mercantile Exchange. Let me just see where margins are right now. Because if volatility starts picking up here, and natural gas margins are right now $27.50 per contract.
That's cheap money. Right.
If they raise those margins, you could see a scramble for the exits quick. So keep your eyes on that.
I think I get 1,700, Andy.
Do you?
Yeah.
I have 2750 on my CQG.
Yeah.
Let me check it again.
Wow.
Hold on.
Yeah.
I have.
Well, either one, folks. That's very light.
I see 2750 initial margin.
Yeah, I get 1750. But anyway,
So
that's still cheap, folks, because the bottom line is that when I used to trade gas a lot, it was $10,000 a contract. So it's
right. By the way, just keep your eye. Whatever it is. I mean, one of us is right. Whatever it is, keep your eyes on the press releases from the CME on a weekly basis, on a daily basis, because if you suddenly see margins expand, that nothing cleans the specs out like that.
Oh, that's a fact. Well, listen, man, we love having you back. We look forward to the show at 6 o'clock. 5
Thanks
o'clock.
so much.
Sorry, 5 o'clock. Okay, man. Thanks you. Stay right there, folks. We'll come right back. And, of course, after the 4 o'clock hour, we're going to have a lot of numbers. Coming right back, folks.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 106. You get the NASDAQ down 4. S&Ps are off 12. Some of the higher volume stocks out here, this is what you have happening. Bank of America is flat. We have Microsoft up 20 cents. You have United Airlines. That's getting toasted and roasted. That's down $5.77 with monster volume. You get, let's see, Verizon is off $1.90. We take a look at some of these Dow stocks out here. So you have Disney down 30 cents. You get Citigroup off 5. We get Microsoft up 21. So Microsoft coming out with numbers after the close. That, of course, has a good weighting structure in the Dow Industrials, S&Ps, and the NDX 100. Let's go over to the oil market and take a look at the XLE. So this oil, to me, looks like we're just about getting there. You know, the XLE looks like it wants to get up to that November 3rd high, as a few of the other oil stocks have. But actually, when Andy and I were just talking, I was going through a few of these oil stocks, and it looks like they're almost topping out right here. Okay, if we go over to ExxonMobil, so check this out. You know, Exxon's been trying to make it up to this November 3rd high for quite some time, as the rest of them are. You know, Chevron took it out. So the high is $87.43. You got to 87.84 today. We're going to do it with about 10 million shares versus 20. And it looks to me like it's not going to be able to hold price. So that's going to be intriguing, you know, as you come off of that, is that going to give it up, period, and, you know, come all the way back down into like 79 bucks, which it can. Chevron, we take a look at Chevron. We have a Chevron, same type of setup. Now, Chevron took out its swing high. That was $98.64. You're at 101 right now. Dramatically lighter volume, bottom line. We'll see how that comes off, because it's rejecting higher price out here today. We'll see after a rejection of higher price, do you come off that level with volume expanding? That's what you'd be looking for if, in fact, you want to put a shot on that position. The XAU, the HUI, we go over to the gold. The Philadelphia Gold and Silver Index, bottom line, it's hanging at highs, man. This is really intriguing, too, because what you have is that yesterday Monday and Tuesday, and today is going to be a huge amount of volume, too, has volume. It has, in fact, oh, this is pretty cool. So check this out. This is another ABC up. Okay, so this is pretty cool. So the XAU, A point 66.71. Call it 67 to 80. So you got 13 bucks. And the C point is 74.84, $87, and we hit 85 thus far. So 87 is the ABC. It's a small one inside a much larger one, but that is a small ABC up. And let's see, we very well may have this on the HUI also. 31 million shares, 32, yeah, you do. Okay, so this is pretty cool. So in the Gold Bugs Index, you're talking 168 to, you're talking 40 bucks to 209. which gets you to 230. This is pretty cool. So keep your head wrapped around that, because that's another confirmed ABC structure on the way up now. It's going to turn into a complex one because you just went back underneath the B point, which is 209, but you took it out, took the swing point out, and took it out with volume. So that's going to be wild just watching this, because the equities themselves, they're still, they're volatile. Oh, my God, they're volatile beyond belief. But the bottom line is that they're acting correctly. And fundamentally, what you have, like Newmont come out with numbers today, beat their numbers. That's doing an ABC structure on the way up, too. This is cool, so check this out. And this is what the numbers coming out. Your A point on Newmont is $24.59, call it $25. $6 I'm ballparking these folks. It's quick, $34. And this is taking it out with volume, too. You need a volume more than 12 million to get, well, it's going to be interesting. It's 12.2. And we're at 11.4. So maybe a little bit short. I don't think that's going to get 1 million shares in 15 minutes. Let's go to King Dollar. So King Dollar out here, you talk about volatility out here this morning. So Draghi was talking, the European Central President was talking this morning. And the dollar, you talk dollar, gold, and markets. They were taking conniptions, folks. So check it out. So the dollar had opened at $94.51. It dives down to $93.83 and lunges quick, just as back, all the way back up. Now, what you have is this. You have a high volume swing low on the dollar index, and they like to get tested. So right now, the low of today, which is 93.84, has a high volume swing low. What we also have is the August 24th high volume swing low in the dollar index. And then you have an additional ABC structure down with a price target of 92.30. So your probability is that that's where it wants to go. The real key, of course, is that going down there is one thing. If it breaks that, oh man, then commodities really go to the moon. Because if it breaks that, then you're talking at $88. And it's like, okay, so is all currencies across the world getting weaker? And, if the dollar is getting weaker, that, if you're a fundamentalist, that's about the only thing that you can kind of get out of that, okay? Because, I saw Andy in the den, and Andy was having a hard time. He was saying, and this is so true, because it's like you have a hard time saying, how can the euro get stronger? Well, it is getting stronger, but I can understand that statement in 2 seconds, because it's crazy. Europe is in tough shape. But guess what? If everything gets weaker, it's all relative. That's how this thing shakes out. And in that context, what does it mean? It means that metals are worth more money, wood's worth more money, commodities are worth more money. Anything that's a hard asset is worth more money, because that's how it goes when fiat currencies get lower. Because all we're talking about here is we're talking about all our perceptions of what we will swap something for a good. That's all money's about, folks, okay? And if you keep your head wrapped around that, it's a little bit easier sometimes thinking of the correlation between a piece of paper and what you're getting that on the other side of that piece of paper. Inside the Dow Industrials, let's go take a look at the weakness versus the strength out here. So the weakness out here today was Travelers Insurance. That's down $6.57. Let's get it slammed good. Wow. That's a gap away on the way down. Look at that. So you tested a high. The high had 4.5 million on the weekly, and you tested it with 2.1, and then you come off with volume. Pretty amazing. And this is a tough one too, because Travelers, it looks pretty good. You had volume, but it did what it should have done. It moved, but this is still a tough one. You had some pretty good volume up there, but once that test came in, with half the amount of volume at the high, rejected price, rejected volume, and see ya. Don't want to be ya. This is Tom O'Brien. This is TFNN. You stay right there, folks, because right at 4, which is 10 minutes from now, that good old Google's going to be pulling the plug, telling us what way the NDX 100 wants to go. Because where Google goes, that's where that NDX is going to go big time. Dow's down 105, Nasdaq's down 3.5, S&Ps are off 12.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We get the, let's see, so we get the Dow down 107, Nasdaq's down 4, S&Ps are down 13, and 45.95, 45, interesting. Okay, so, folks, if you have never tested the Nadex platform, come over to our website at TFNN. I'm going to show you something right now. This is going to be intriguing watching how this shakes out. This is why. So you'll see the banner on the top of the side. You can bring the exchange up. They'll put $25,000 of paper money into your account. You can see how these contracts trade. My son and I, we do a program every trading day, 10 in the morning. We're trading this almost every morning. Now, with that said, so check this out. You have 10 minutes left, and this is a different play on this. Okay, but we were talking about this morning. And I'm going to do this play, okay? So what it is this. You have the NQs right now are trading at 45.32. So I'm bearish, okay? And I know that the Google and Microsoft, they both can move the market in a big way. Now, Google is 4.3% of the NDX 100. If Google comes out with bad numbers, bottom line, this will go down. And this is till 4:15. Now what happens, oh, look at this, just as I'm talking, my risk just went from $14. I had one contract from $14, and you can make $2.72. The bottom line, I'm going to put a few of these on just so you can see how this shakes out. So I'm risking $84 to go for $816. Now, what happens is this. I'm out of the money. So this is like an out-of-money deal. But guess what? What you have here is that Google can move the NDX 100 and 20 points in a heartbeat. So you wouldn't do this unless you had some news expectations that are coming out. Now, simultaneously, when you're doing that, what you also want to do, and I'm going to do this on the other side also, is on the other side, you're going to turn around and you put the sell in, simultaneously. But I just want to show you how that works out. Well, not how it works out, how it works, number one. We'll find out whether it works out or not. And there's plenty of folks in the, that figure that Google never, I see our man Alex is saying they never disappoint. Well, they've definitely disappointed, They've gone up 60 or 70 points too, but, all you have to do is go look back in February 2nd. February 2nd, Google was at $789, and 5 days later, Google was at $663, So they definitely disappoint. And where my head's going with this on a technical basis is this. What we're doing is we're coming into a downdraft with 6.7 million shares, and guess what? We're doing it with 2 million shares. So the cool thing is, guess what? I'm risking 80 to get 800, and I'll know in about 10 minutes. And it doesn't mean that you get the full 800, by the way, also. That spread would have to go down into a, let's see, the bottom of that spread is at, it's not bad, man. It's really not bad. 45.95. I could get that. If Google doesn't perform, 30 points is pretty easy. Now, just the other side of that, we may see that NQ's up at 45.60 in about a heartbeat too. But guess what? That's what it's all about. No doubt about it. Yeah, bonds. Bonds have been getting toasted and roasted, and the XLU, that you talk about taking some money off the table fast and furious, man, oh man. Pretty amazing. You stay right there, folks. I'm going to be coming right back. Dow right now is down 106. NASDAQ is off 2. S&Ps are down 12. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love and giving the old wow. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be strong. Go with your heart and believe in miracles, because anything can and will happen. Market-wise, let's take a look at it out here. We had the Dow Industrials closed down 113, NASDAQ off 2, S&P's down 14, gold contract down $2.70, trading at $1,251 an ounce. Silver down 9 cents at $17.04 an ounce. Platinum up $8 at $1,025 an ounce. Copper up a penny at $2.25 a pound. Light sweet crude down 61 cents, trading at $43.57 a barrel. Bonds, you had the 10-year down 4 ticks, 129.19. 30-year off 22 at 162.23. King dollar up 124 ticks at 94.59. The euro down 9 at $1.12, and the yen is trading at 109.46. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so the cash S&P, we closed out at 2091. It had tested out once again that 2104, failed on price, failed on volume. What we have with volume out here in the NYSE is that we come back and we come down with volume. This market wants to go south. I suspect what we have now is that now we get the S&P topped out. The NDX 100 topped out. Now I expect to get the S&P. We did 1 billion shares. We go over to the NASDAQ composite. What do we have inside the composite? What we have inside the composite did 1.7 billion, so that's not that much. NDX 100. What do we do at the NDX 100? NDX 100 closed at 110.65, and this is where the action's going to come in, folks. That's trading at 109.73 right now. And what is that all about? Well, let's go over to Google. Google came out with numbers. Google closed at $759. That's trading at $717 right now. Microsoft also come out with numbers. Microsoft closed at $55.78. That is trading at $53 right now. And if we go into the NQs, if you were with us when we were coming into the close, what we were talking about was the NQs. And what we were saying specifically, what I was saying specifically, I was going over to the Nadex platform saying that I felt that the Google basically, was going to get into lower price. And the reason that I was looking for lower price on Google is that specifically we had come down in February and we had come down with 6.1 million shares. Well, we were up with 2.3 million shares. So bottom line, that could move the NDX 100. And in that context, what we were going to do, well, bottom line, what we did is this, is that if you listen to my son and I every morning at 10 o'clock, we trade this almost every morning at 10 o'clock. And what you had is this. We were talking about this morning. And this is very unusual, but you can do this when you have a large weighting inside the NDX 100 and you get earnings coming out. And so what ended up happening is that the bottom line is that what you had is this. Now, if you're looking at my screen, I had other contracts on there. But what you're going to see is that I bought 3 contracts. I actually sold 3 contracts. And the way this works is that the contracts that I sold, this was at 5 minutes of 4. And the contracts I sold, the lower end was $44.95. The top end was $45.25. Now, when I sold those, the NDX was out of the money by 6 points. It was 45, I believe. No, it was 45.35. So I was out of the money by 10 points, okay? So I risked $80 to make $800. Well, the bottom line, folks, is that more than likely it's going to come in pretty good because right now I'm at $44.98. So if it's 3 points down, that is 80 to 800, right? No. I'm sorry. 1 second. So right now I'm up. Yeah, I risked 80. I'm up 630. I'll do it per contract. Okay, thank you. This is easier like this. Okay, so I sold them at when we do this. This is 45. So I sold them at 45.35, I believe. And we sold one. Bottom line, I'll go through the rest of this. They'll be closed. They're going to close. What's so cool about this, folks, is that they close right at. Oh, there it is. Thank you, Tom. Okay, so this is what I did. I risked $28 per contract in order to make the 272 per contract. And the way it's looking right now, I'm going to get almost the whole thing. That's what it comes down to. Because right now we're trading. Well, what happens with these contracts, by the way, folks, is that, I get 3 minutes. Now, if you're looking at that other one, I had sold 3 contracts earlier, too. Bottom line, listen to us in the morning at 10 o'clock. I'll walk you through these contracts. The volatility, we get the volatility out here in spades. And so if you're in your car, you can just come over to our website at TFNN. You hit the Nadex banner. You can bring up the exchange, put $25,000 of paper money into your account, and these are defined risk contracts, and that's the cool thing about them, folks. Okay, So let's go back over. Let's go see what Google has to say. Okay, so they missed revenue missed. Okay, so let's see what we have here. Okay, the earnings per share, they came in with $707.96. That was the estimate. Bottom line is that they only did $750. So their cost per click is down 9%. That's a big number. Let's see what else we got here. Revenue. Let's see, revenue $16.5 billion. So they missed their top line revenue also. That's a big number. You missed the top line revenue, it's a big number. MSFT, we go take a look at Microsoft. What do we have with Microsoft? Microsoft closed at $55.78. That's trading at $53.70 right now. And their estimate was 64 cents. They made 62. Yeah. So bottom line is that you're going to see the volatility continue out here. It's going to be pretty heavy. The Qs, let's see if they hit everything. I'm sure they probably hit everything. So the Qs right now, they closed at 110. That's trading at 109.72. If you take a look at the SPYs, what you have with the SPYs closed at 208.97. That's at 208.76. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow finished down 113. NASDAQ off 2.5. S&P's down 15. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Visa just come out with numbers. Visa closed at $80. Visa is trading out at $75, and we'll have a slew of more numbers for you. Starbucks, SBUX. Let's see, did they just come out too? SBUX. Starbucks closed at 60. That's at 57. So we're going to be having a lot more numbers for you. Right now, we got our man, Mr. Basil Chapman, coming up as we do each and every Thursday at 20 past the second hour. And don't forget, folks, Basil has a great show right here at TFNN every trading day, 11 to 12 Eastern Standard Time. You get it right on your cell phone. So if you're in your car listening to us right now, remember, folks, that we do live programming 7 o'clock in the morning to 6 in the afternoon on Tuesday and Thursday, 8 o'clock in the morning to 5 in the afternoon, Monday, Wednesday, Friday. Get it right in your cell phone, TFNN.com. Hit Tiger TV. Basil also has a great newsletter. You can test drive it, the opening call, right now. You come over to our website at TFNN. You go to newsletters. You go to trading newsletters. You can test drive the opening call. 30 days absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great, man. Yourself?
Very good, thank you.
Cool. So let's see. What are we going to look at here?
We're looking right now at the Dow, the chart that I show my subscribers every day, and I explain it based on the Chapman Wave methodology. I also look at the way that certain moving averages are, and plus the wave count. And I had to make a slight change in the wave count. Sometimes that happens, and I spent a lot of time over the last 2 days trying to assess the strength of the weekly charts. You know that the S&P, if you look at the futures, the weekly chart has gone up 17% in one leg. We've not seen that before. So assessing the strength, but looking at so many stocks that I believe, very important stocks that were making very close or have just made peaks that might be peaks of consequence in the daily. So this morning, we actually we do have longs and we have shorts in my opening call, but I had an update at just after 10 o'clock because I felt I just needed time to think it through, because there was a conflict within me that said strength in the larger weekly chart should outweigh the daily. But my daily charts were saying, nah, you've got to base them on the shorter term at this point. So we actually went quite heavily short for us. We short the Dow, we long the volatility index, and we short in some other areas. And what we're looking at here is that you had this little tiny doji candle yesterday, and then what was really needed was exactly what we saw today. I called it a stealth, very quiet lower highs and lower lows almost all day. Every rally started to fail. And it seemed to me, as I was going through, when I got calls this morning, when I was going through these different stocks on my show, I kept looking at them and saying, gee, this is, I'll go through Google in a moment and I'll go through Microsoft. But look at this. The MACD is sort of flattening out here. And the stochastic was very strong in the 90% area, but just starting to turn down. I'm going to show you this chart right here. I hope you can see it. I'm going to have a look on the screen to see how it shows.
I can see
This is a very simple chart. This is the Dow, the one I just showed with very little, there are no indicators. It's just the chart itself. And then I've drawn the cups. There's a cup, and there's a cup, and there's an arch formation. And here's the first half of a potential arch formation. What was really important, look, the high of May last year, May the 20th, at 18,351, comes down to the 24th of August at 15,370, big move down. And then it has a sharp move up to the 3rd of November at 17,977, plunges again to 15,450. So now what it's done, it's made a lower high from that May high and a higher low from the August low. Yeah, but look what happens. See how it comes up to the day yesterday?
Yes.
Now look at this. Look at these top lines. That, let me just move it a little higher so that you can see what I'm talking about. That measures exactly, well, it's 1 day short to that. It's
How cool
almost
is
an
that?
exact price.
Yeah.
So that's just one indicator. I wouldn't rely, put everything on stressing. But it does seem to me that at this particular point, I can show you some things in the daily charts that seem to confirm that at least a short-term top. So here's the Dow, and it went to this peak D, and now we've got the red candle. Weekly is still making the W patterns very strong, but they could, you can have a pullback here quite easily of even 400 points and still be within this up move. So that's the reason why I'm looking at it.
We'll be 400 points down as soon as these futures open up.
I have to tell you something. The Dow futures are down 173 already.
Yeah, and they're already closed. So when they open back up, watch out.
So now let me show you something interesting. I went through this on the show this morning. There's a potential peak E right here in Google, and that says that if you see how the MACD is not on this daily chart, not nearly as high as it was there. See how the stochastic turned around? So that was a fantastic trade. You timed it beautifully. And what's happening here is that if Google starts to test breaks the 740 early in the morning, this candle here at 731 is important. But all of a sudden, you're going to see the technicals deteriorate. So that's Google. If you look at Microsoft, the same thing. Peak D in the Chapman wave. The MACD didn't confirm the high. Stochastic made that same turnaround. So this is a very important moment, and you've had such a spectacular move to the upside. You've got to believe that there's got to be some kind of a pullback here to give, to recharge, to see what could happen. So we went short, and we'll see what happens. But that's the situation we're in right now. And if you look at the T-bonds, right here, you can see this white line here. This is the 30-year T-bond yield. This is the 10-year T-note yield. This is the light blue one is the 5-year. You can see the turn up. It did not go down to the low of 24.09 in the 30-year. That's 2.4. Instead, it's turned around. So if the yield suddenly goes up, that's going to impact. So that, get to 27 or 2.7, you've started to make higher highs and higher lows on the daily chart, the weekly chart. So this is a very important period. Also, if you look at the, I don't know if I can get it right now. Oh, this is interesting. This is the South African gold chart. This is the South African index, Dow Jones South African Stock Index.
Okay.
Look at it, how it held support, and now it's halfway into that very big sharp down candle. So a lot of things are going on here where fund managers are finally able to put money to work in other areas like the commodities, and they can start taking a little money off. So I think that this is a period where we have to be very careful. Of course, tomorrow we could see with these patterns that change so quickly. But if you look, even Visa has had a spectacular move, and it's made this peak G, and it's down already, down 4.
Yeah.
So this is also looking highly vulnerable on the shorter term, and so is MasterCard. This is a peak E in the Chapman wave. So all of these are right at a period where you can expect a pullback, and what it does say is that upside is limited, and now you start to see the testing on the downside. That's the way I'm looking at it right now.
toasted and roasted.
Well, we'll see about the roasted, but we got the toasted.
And folks, you can come over to our website at TFNN. You can test drive Basil's newsletter right here, right now. So you go to newsletters, trading newsletters, to the opening call. And, of course, don't forget, every trading day, 11 o'clock, right here. Basil's got a great show. Call him, talk to him, all of the above. Basil, you have a great night, safe night. And, of course, we look forward to the show tomorrow.
Thank you very much, Tom. Have a good evening.
You too, man. Stay right there, folks. We'll come right back, and there is action everywhere. And needless to say, most of that action, folks, is down action. There's going to be a lot of gap-aways on the way down, and we'll see where this baby shakes out. Dow finished down 113, NASDAQ down 2.5, S&P's down 15. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Okay, so let's go into Google and dig in and see what they have to say since this baby came down pretty hard. Okay, so let's see where we're going to go here. There's so many stories, we're going to find a good one for you. Let's see. Well, here, I'll just give you a recap. Okay, so the earnings per share was $7.50. The estimate was $7.96. So they didn't meet the earnings per share. Their gross revenue was $16.5 billion. They were expecting $16.6 billion. Now, the clicks, this is going to be a big deal here, I suspect. So the well, it's not that bad. Clicks are going down 9%. They had expected they might go down 11%, so that's actually a beat. Their first quarter paid clicks grew by 29%. They were estimated that they would be growing at 32%. Let's see, so operating loss $802 million versus an estimate of $633 million. So what Google is doing here, when they changed their name to Alphabet, what they said they were going to do, and evidently you can see it right now, they're breaking out operating units. That's what they're doing. Bottom line, though, stock's getting hit good. So $759 would have closed at, and the baby's at $727. Let's go to Jim in Boston. Hey, Jim, what's going on? Oh, I just missed him. He wanted to look at Valley, V-A-L-E. Okay, so Valley is one of the largest producers of copper, nickel, aluminum, bauxite, potash in the world. It's trading at $5.53. It went down 54 cents today. This baby right here, if you own it, you can put a stop in it. But what you have here actually is that you have a high with volume. The stock in, 2 months has gone from about $2.14 up to $6.26. And if you don't own it, you're waiting for a retracement. Yeah, you want to buy retracements on this. This Valley, folks, is making its way up to this $9 mark, $9.14. Taking out B points, taking them out with volume, all of the above. And the commodity run, I think the commodity run is on. That's the bottom line. Okay, so Microsoft. Let's go see what Microsoft has to say. Microsoft came out with numbers. They closed at $55. That's trading at $53. That's nothing like Google, that's for sure. Let's see what they have to say. So Microsoft reported third quarter profit, $3.76 billion, 47 cents a share. They had been expecting, results didn't mean the average of 12 analysts where they were looking for 63 cents a share. They posted revenue of $20.53 billion, and so they missed on the revenue also. The estimate for the revenue is 21.6. They come in they come in a billion shot, 20.5. Let's go over to Visa. Visa, there's no doubt, as one of the targets was saying in the den, Visa is a big heads up as to how much people are spending. So Visa, the estimate was 67 cents. They made 68. That doesn't look bad. Something's in here that's not good. Let's see what we can find. Oh, I see. This is interesting. Okay. So Visa, the world's largest payment network, posted fiscal second quarter profit, beating analyst estimates as customer card spending increased. Net income for the period climbed 10% to $1.7 billion, including $150 million gain from currency hedging, 71 cents a share. There's something in there I don't like. Okay. Let's see. In November, the network reached a deal to buy Visa Europe for as much as 21 billion euros, bringing the two firms together after 8 years as a separate division. Visa said Thursday it revised the terms of the acquisition and that the deal may not be completed by the fiscal third quarter as expected. Well, there's not an indication inside that there's less spending. But we go over to MasterCard. MasterCard closed at $75.54. That's trading it down at 95, and I suspect that's because whatever's inside those numbers that the market doesn't like, that's what's happening there. Now, if we look at MasterCard, well, let's go back. Yeah, see, this is how these equities, folks. Get your stops in. That's the bottom line. So if we look at MasterCard, what you're going to see is this. Visa's going to line up the same way. We were going up and we were going up with 17 million shares coming into 27 million. We go over to Visa, and we take a look at Visa. I suspect it's going to be the same type of setup. It's at the top of the range again. We put this on a weekly, and what you're going to see is that Visa came down on 66 million shares, and we're going up with 39 million. And that's just going to drop out of bed once again. So there's no doubt that you're talking about big numbers out here. Let's go take a look. SBUX. Yeah, what's going on with Starbucks, man? So Starbucks closed at $60.64. It's trading down $4 at 57. Let's see what they have to say. Estimate on Starbucks was 39 cents. They made 39. They're still going to buy back stock. They're going to try to keep this up, whatever they can do. They're going to buy back $100 million in stock. Starbucks reported fiscal second quarter sales that trailed analyst estimates. Revenue rose 9.4% to $4.99 billion. Imagine taking $5 billion in selling coffee, folks, water. You have to love it. They were expected to take in $5.03 billion. The results signal that rivals may be chipping away at Starbucks' dominance by following a strategy of hooking customers with loyalty programs, and smartphone apps. Dunkin' Donuts started testing mobile ordering late last year, while Panera Bread has said its digital sales may reach $1 billion in 2017. Same-store sales growth in the Americans, which include the U.S., slowed to 7%. Analysts estimate a 7.4% gain. Sales by that metrics climbed 9% in the prior quarter. You know, so it's hard. There's no doubt it's hard to basically grow a $5 billion company. I mean, they're growing in China, but the bottom line is that what I do expect you're going to see here is that, you know, all of these, this is the decent start to a pullback, and we'll see how much volume we got on the way down. What we had out here today inside the NYSE is that you had 1 billion shares come in. On the NASDAQ composite, we had 1.748. We'll see some, you're going to see some, these futures open back up. You're going to see some action. And I suspect those tech stocks, you know, the NASDAQ 100 basically said it. That's how it topped out first. S&P will be next, and we'll see how the Dow is going to react. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over to good old Sam Adams. And it looks like a lot of these new brew houses are taking Sam Adams apart. Sam Adams closed at Boston Beer. This is Sam closed at 173. It's trading at 155. Look at this, baby. This is gonna be a monster ABC down. So check this out. This stock was $325 in January of 2015. All right, it's sticking out like a sore thumb. 91 bucks is sticking out like a sore thumb. Now it's gonna go after a swing point of $160 tomorrow morning. You know, this right here. This is. It looks to me like this is an indication. Well, here, let's see what the numbers are first. Okay. Okay, so Boston Beer Company, Sam, reported first quarter net revenue of $188 million, a decrease of $10 million or 5% from the same quarter last year, mainly due to a decline in core shipments of 6%. Yeah, there's no doubt. Partially offset by price increases. Net income for the first quarter was $7 million, 53 cents a share, a decrease of $6.7 million. That's quite a decrease. This decrease was primarily due to decreases in net revenue, a decrease in gross margin, and increased general and administrative costs. There's no doubt about it. What you have here, folks, is this. Okay, let's see. First quarter gross margin was 48% compared to 50%. Full year earnings are now estimated at $650 to $730. The range had been $760 to $8. What you have here is all the new brew houses that people are making beer. You know, this guy here, he started this company. You know what's so cool, folks? This company, it says Boston, but it started right in South Boston. I remember right when he built right down at the Fish Pier. That's where he built. And he was one of the first ones out of the gate, you know, that bottom line, you know, making good beer. Now what you have is that beer places are not only all over the place. If you, in the Tampa, Clearwater, St. Pete area, we have 300 of them. Yes, 300. And they're great. The bottom line is that, you know, I'm hoping they all can stay in business. That's a lot of them. There's no doubt about that. But what you do have is that if you take a look at this whole area where we're in down here, it's turned into a beer mecca. And so what ends up happening, of course, because if they don't have any other beer, you know, like let's say there's many even just regular restaurants that will carry Sam Adams, because I think their distributor is someone that carries everything. So I'll get a Sam Adams. But guess what? If you're out down in St. Pete or in Tampa, well, guess what? You can get as many beers as you want, and they're dynamite, and they were probably made 3 or 4 hours earlier. No, 3 or 4 days earlier, sorry. So that has to be hitting into them in a huge way. And that's going to continue hitting them because it's a big deal. And those companies are making money. In fact, one of the largest company down here in Tampa, now they're really going to get big because another big, large company just ate them. That's Cigar City. That's a big number. Our phone number is 877-927-6648. Let's go look at the oil market, because my take here, folks, looks to me like oil is going to be the next one that's going to roll here. So this contract here, we're trading at $43.39. Now, on the weekly, this is what's going on. This is pretty cool. When Andy and I were talking at the first hour, on the weekly, what you have is that it's a nice setup. In fact, it could be an ABC up setup. I have to get my head wrapped around the volume and put a continuous contract on there. That being said, on the daily, what you have is that you had a rejection of the $44.26 out here today. We got the $44.49. You failed on price. You failed on volume. The key here now is this, is that how we pull back. And if we pull back with volume, guess what? Then this probably is right about the level. And one of the main reasons I'm looking at that is that the oil equities look to me like they're just about ready to turn once again. You know, they've had an extraordinary run. And you know, when I say extraordinary run, if you look at Murphy Oil was trading out at $31 in November. It trades all the way down to $14 in February, and then trades all the way back to $30. Now, we got this on the way up. I got this a couple times on the way up. But now my head's thinking of flipping right around in it. Why? Because watch this if you pull this up. It's pretty cool. So we're coming into a swing point that had 23 million shares, 16 million, and 16 million. Yeah, I guess, no, I'm not going to go short this because we've done 17 million. No, this is not a short position. This is definitely not a short position. Okay, so now what you got to do is you got to get on our man, Mr. John Logan's TAS profile scanner, and you put up the XLE, and you see what's inside the XLE. And what you'd be looking for is that you'd be looking for the weakest stocks inside the XLE. That's what you want to be looking for. You know, the XLE has been trying to make it up to this November 3rd swing, the low of that, which is $70. It doesn't look like it's going to make it. We made it to 66.98, so $3 away from it. That's the way I think it's going to probably stand to. You know, now if we go over to Apple, so check this out. Apple is the equity that gave the clue that the NDX 100 wanted to go lower, and this is how it did it. Last week, Apple comes off, you know, first off was just coming up into ice. You know, Apple's been getting killed for quite a while. It comes up into ice, and it does it with 25 million shares versus, like, my God, versus 46 million. So that's the test of how you're coming into ice, right? So, you know, we know we're coming up with dramatically lighter volume. Then what ends up happening, and this is the kicker, this is what you want. Then it comes off that high with volume. That was the clue, the first clue. 46 million shares. You know, the day before you did 25 million is trying to get higher. 46 million on the way down. On the 15th, it follows through with 60 million on the 18th. That's a big number, folks. That's the indication that you start looking at the NDX 100 and say, okay, it wants to go lower. Now it's sticking out like a sore thumb with Apple is $96.62. That is the high volume low from the last time that the market got crushed. You know, so I suspect, number one, you know, we're going to try to make our way down there. Now, Apple doesn't come out, or comes out with their numbers on the 26th. And, of course, today's only the 21st. So Apple is not going to be the one to save the NDX 100. Now, let's go over to Amazon, because Amazon also has a large weighting. Amazon's on the 28th. We know Microsoft has a monster weighting. Microsoft's at 8.54 weighting inside the NDX 100. You know, so if Microsoft stays down $2 tomorrow morning, that's going to hit the NDX 100. And of course, what does end up happening after the market? It really doesn't have to be happening tomorrow morning. With this many equities down, my take, folks, is that this is the beginning of the downdraft. And guess what? If you're long, just put your stops in, okay? You've already got a few different chances. We hit the chance in August, goes down, it comes all the way back. December goes down, comes all the way back. Now, don't basically not take
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And don't forget, folks, as soon as I get off, I'm Mr. Andy Hecht. He's going to be coming up, giving you a great show. And, of course, he's coming up, he's going to be doing a great commodity course. So check it out on the front page of TFNN. This is going to be pretty wild as the public relations comes out with Google. Of course, Google's named Alphabet now. They already come out with their first couple announcements. And with theirs, here, let me read you this one first. This is not theirs, but then I'll reiterate what they're saying. So Google's parent Alphabet reported quarterly sales and profit that missed analyst estimates. First quarter profit, excluding sales, passed by onto partners, rose 18%. What you have here is this. Google chiefly makes its money from advertising. As that business has grown, growth has slowed and the economy has turned to new areas like subscriptions, cloud computing. Last year, it reorganized the company, calling it Alphabet to help create new businesses. So far, growth. And further bets like smart home devices, healthcare, fast internet services added more cost than revenues and failed to offset the slowdown in advertising growth. So Google just put out a press release, and inside that release, that's what it's saying, that their losses, but it's interesting because when I just broke this down, the loss was $883 million. Their losses are inside the these new fields. You know, and so they're going to break them out, and we'll see where it shakes out. The big thing, I think, that what people are looking at here is that the advertising revenue is going down. And what I would say, just being a small company that has used both Google and Facebook, guess what? Facebook is grabbing Google's business. And this is what the difference is, folks. So Picture, we advertise on both of them, right? The click deal on Google, right? You know, many days, let's say that, you know, whether it's spending 200 a day, 400 a day, 500 a day, whatever that was at that point, right? You'd put a maximum amount in that you want to spend, right? So what could happen with Google is this, is that all of a sudden, you know, let's say you're spending 200 a day. So what ends up happening, you know, you'd be out there for 50 minutes and all of a sudden the 200 is gone. It's like, what just happened here, right? Well, with Google, a couple times what happened is that we were spending more than that and it was gone like in an hour and a half because they have so many fraud clicks, okay? So when you're trying to get hold of someone and you're trying to deal with that, I didn't get satisfied. That's the bottom line. And as that was happening, guess what? Facebook was coming along. They were basically doing advertising. Bottom line, using both of them, we still use Facebook. We use it almost every day. Facebook works 10 times better than Google. And we don't, at this point, we've been on Facebook now for a good year, about a year. It hasn't been that long. You just feel like you're getting much more for your money. You know you've drilled down to the demographic, and the demographic that you get, you can pick it out pretty dramatically, and we know that we're getting customers. You know, so it's really, and I suspect that Facebook, you know, is taking some of their revenue, and if they don't, you know, get something else going, they'll probably take more of it. So Facebook has revenue 2016 of $25 billion. Google has revenue of $71 billion. So that's pretty interesting, isn't it? Yeah, so Google's still 3 times bigger than Facebook at this particular point. We'll see how long that goes, though, you know. So when these futures open back up, actually, let's go overseas first. Let's go to the UK. We take a look at the UK. So the UK today, that was down 28 bucks. Yeah, bottom line, folks, is that get your stops in because it's going to be a little nasty out there in the morning. And always remember, whatever you think about, you bring about, whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture, step into it, take ownership and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there. Indy's coming right up, folks. Right on your cell phone, TFNN.com, hit Tiger TV. Wow! Go get them, folks.